The S&P 500 has shown itself to be bullish, and at this point in time, we are recapturing the trend line. You can see that we tested it during the trading session just above the 50-day EMA on Tuesday and then turned around. I think if we can get above the 6,700 level, it's likely that the S&P 500 really takes off. Here in the Bitcoin market, this one is going to be a little bit more difficult to deal with, mainly because there are so many different factors out there that could come into play. I look at the $108,000 level as being important. I have for months now, and it did show its importance during the trading session over the weekend. And now we rallied a bit. We tested the 50-day EMA. We've plunged in trying to recover late in the day. The way this candlestick shape is starting to present itself does suggest that perhaps there are buyers down here. And if so, then we may stay range bound between $108,000 and $125,000 for the time being. Markets continue to see volatility. This is Chris Lewis from Hola Prime doing your technical analysis wrap up. The first market I'll start with is gold. And of course, gold is a market that everybody has been talking about as of late, and it is bullish again during the trading session. That being said, it is worth noting that the market seemed to be a little concerned about the $4,200 level. The market will continue to look at that as a potential important level, but I also recognize that we have a situation where a lot of what we are seeing is just simple melt-up behavior. While you certainly cannot short gold anytime soon, the reality is that you don't necessarily want to jump in and buy it with a huge amount of money. After all, you have to ask yourself, how much further can this go? Yes, they can continue to push this higher, but you also have to understand that this is a market, given enough time, will eventually have to offer some type of value to continue to bring people into it. Because of this, I think you're still in a situation where you have to be waiting for some type of value. The silver market continues to be very noisy, as we had initially rallied, only to turn around and fall rather significantly. The market is hanging around the $52 level, which is an area that we had struggled with during the previous session. The market breaking above $52 during the previous session garnered a lot of attention in the markets, and as we have shot back and forth, it is a market that shows a lot of volatility, a lot of concerns, and I think given enough time, we probably have to be very cautious trying to get long of this market. When you go to the shorter term charts, you can see just how it had melted down earlier in the session. It bounced, it fell again, and now it looks like it's ready to try to rally again. That being said, one thing that you have to be very cautious with is the fact that the spot market has broken above $52 during the earlier session. But the futures contract, of course, is much lower, and that suggests backwardation. Backwardation suggests that futures traders, at least, believe that the price is going down over the longer term. This type of volatile candlestick is not generally a good sign, and even if the market rallies from here, you have to ask questions of whether or not people are really comfortable with trying to jump in and buy silver hand over fist. Quite frankly, I'd like to see some type of pullback in order to find enough value in silver to get involved again. With this, I think you have to understand that the market participants could end up being a little bit erratic and look towards $48 as an ultimate buying area, but we'll just have to wait and see. If we just melt up to the upside, at that point, it becomes very, extremely dangerous to get aggressive. The euro initially fell a bit during the trading session on Monday, but then turned around to rally. But now it looks like we are struggling above the 1.16 level again. This is an area, a large round psychologically significant figure, that people are likely to pay close attention to. With this, I would point out that we do have some type of reaction to the 1.16 level multiple times during the last really couple months. And I think you have to understand that as we look at this chart, it's easy to see that there's at least some type of market memory here. The 50-day EMA is sitting right at the 1.1670 level. So if we do rally, I think it's probably somewhat unlikely that we just take off to the upside. Ultimately, I think you've got a situation where traders are probably going to continue to look at this as a fade the rally type of scenario. If we were to break down below 15.50, then I think it opens up a move down to the 1.14 level. The British pound looks quite a bit different, as it plunged below the 200-day EMA only to turn around and show signs of life. By forming a hammer, it does suggest that perhaps the possibility is that the British pound will try to recover. The British pound has done better against the US dollar against over the last several months in both directions, both to the downside and the up. So what I anticipate is that all things being equal, the British pound will continue to outperform most other currencies against the US dollar, and therefore, if the US dollar gives back some of its gains in other currencies, it'll probably drift higher here. I don't necessarily want to buy the pound, but I do use this as an indicator, if you will, almost like a tertiary indicator. The US dollar found itself initially trying to rally only to collapse and aim towards the 0.80 level. The 0.80 level is a large, round, psychologically significant figure and an area that I think a lot of people will end up being looking at this as a magnet for price. The downtrend line, I think, opens up the possibility of support on the way back down. And if we can break above the 0.8080 level, then we could make a move towards the 0.82 level. I think this is going to move with the dollar in general. And as the dollar was a little softer during the trading session, it makes sense that we did drop. All things being equal, this is a market that I think will continue to be very noisy, and don't really like shorting this pair. I'm looking for some type of bounce and a move to the upside. Ultimately, this is a market that features two safety currencies, and therefore it is likely to be a scenario where traders may try to take advantage of US dollar strength, but I think this, kind of like the British pound, might end up being a little bit of an indicator because the momentum probably is very slow. The US dollar initially did try to rally against the Japanese yen, but it has given back a little bit of its gains. All things being equal, the 151 yen level is an area where we had seen a lot of resistance, and ultimately this is a market that I think if we do drop towards that area, there are probably people willing to get involved. A bounce from there certainly looks like a nice opportunity, but even if we break down below there, I'm looking for a bounce and momentum to continue getting long. The market at this point in time continues to pay for holding on to the long side, and that's something that I've been doing for a while. We've recently seen the 50-day EMA breaking above the 200-day EMA, kicking off the so-called golden cross. I believe eventually the US dollar probably goes looking to 157 yen. The US dollar has rallied against the Canadian dollar, but it does look like it's running out of momentum. At this juncture, I think a short-term pullback is likely, but that pullback probably offers a buying opportunity at lower levels. If we were to break above the top of the candlestick, then I think you've got a situation where we will continue to climb toward the 1.4250 level. That is my target overall anyway, based on previous supply and the inverted head and shoulders measures for a move to that area. So it all lines up quite nicely. And now we are getting ready to see the 50-day EMA try to cross above the 200-day EMA, which in and of itself is a bullish sign as it kicks off the so-called golden cross. Remember, the Canadians and the Americans are still in a bit of a trade spat, although there are agreements in place that are still being respected. This has a detrimental influence on the Canadian economy, much more so than the U.S. economy. And as a result, I think you are seeing this play out in real time as a repudiation of what's going on with Canada overall. The Australian dollar plunged during the trading session but turned around to show signs of life. I think at this point in time, a bounce makes a certain amount of sense, but I think it also offers a shorting opportunity. Near the 0.6550 level, I think you have to look at that as a potential barrier, as it is not only a area that has been both support and resistance multiple times, but we also have the 50-day EMA sitting right there as well, and I think that has a little bit of technical resistance, and of course, a little bit of market memory is probably going to hang around there. If we can break above that, then the 0.6625 level, I think, offers resistance that people will be watching as well. Quite frankly, any rally at this point in time opens up the possibility of a fade the rally type of scenario. And I think the Australian dollar continues to underperform other currencies against the US dollar. The New Zealand dollar, of course, is no different than the Aussie dollar. It is forming a bit of a hammer, but really at this point, I think what we're looking for is an opportunity to start selling again. I recognize that the area right around the 0.5750 level probably matters, as there's been a lot of action previously. A rally from here that shows signs of exhaustion, I think, opens up the possibility of selling again. Even if we break out to the upside, the 0.58 level is an area that I think a lot of people will be watching for a potential short also. The hammer, of course, is a bullish sign, but when you look at it through the totality of the overall trend, I just don't see why you would try to swim upstream here. I like the idea of fading signs of exhaustion. That has worked for several weeks, and I think it's only a matter of time before we start to sell off. If we break down below the bottom of the hammer for the trading session, and then it goes much lower, perhaps down to the 0.5550 level. All things being equal, I think this is a situation where you are trying to take advantage of cheap US dollars, and keep in mind that the New Zealand dollar is a commodity currency. So in that environment, if we continue to see more risk off behavior, this is a pair that will fall. The euro has bounced quite nicely against the British pound, and you can see we continue to try to drive towards the 0.8750 level, but have not been able to break above it yet. I think you've got a scenario where you need to keep an eye on the potential divergence in the MACD with this level, although if we break above the 0.8750 level, then it could really kick off a bigger move. Notice that we are starting to sell off later in the day, or at least pull back a bit. It'll be interesting to see if there's any follow through there, because if there is, we could find ourselves right back to the 0.8660 level again, where we seem to be very interested in this pair from both support and resistance standpoint. Breaking there opens up the 0.86 level. As things stand right now, I think this remains a very neutral and sideways noisy kind of market, but that's not uncommon for the euro against the pound. The euro has gone back and forth against the Swiss franc, and it suggests that the 0.9250 level has offered support. The market going back and forth in this area suggests that we are in fact trying to turn things around and bounce a bit. And if we could bounce from here, then the 50-day EMA is likely to be a bit of resistance. If we could break above there, then the 0.9375 level is an area of resistance. I think you continue to see a lot of noise here. And with this being the case, I do think that we are likely to see a lot of back and forth trade here. That makes a sense as the euro against the franc is a huge risk appetite barometer, with the Swiss franc being a safety currency. The euro, of course, rising in times when people are willing to take on a little bit more in the way of risk appetite. The euro against the Japanese yen has shown signs of weakness, but it has turned around to show signs of life later in the day. And I think this is a market that will continue to offer the opportunity to buy on dips. At this point, the yen itself looks like it is starting to roll over a bit, and that will help the euro, despite the fact that I'm not necessarily that excited about the euro in and of itself. I think this is an anti-Japanese yen play. Notice we are still in a very strong uptrend, and now we have at least tested the top of the gap from last week, and we will have to wait and see whether or not the buyers come back and start pushing to the upside. If they do, then the 178 yen level would be targeted. After that, 180 yen is your next potential landing spot. Pullbacks to this point in time could drop all the way down to the 50-day EMA, currently sitting right around 173.40 yen. But it is rising, and it is starting to act more or less like a trend line over the last couple of months. So we'll see if that plays out. Either way, I don't have any interest in shorting this pair because, quite frankly, I do not want to own the yen. There was some talk overnight from officials in the Bank of Japan about intervening, but they can't do that. Not effectively at this point in time. It's obvious that the Japanese yen has flipped the script here, and the market smells blood in the water, as it were. The British pound initially rallied against the Swiss franc and then crashed right back down to the 1.0650 level. The area between 1.0650 and 1.06 continues to be a massive support level that people will be watching closely. This is a market that I think continues to see quite a bit of choppiness and volatility in this area, as this is an area that's been important for quite some time. The market continues to see a lot of noise, and if we could break to the upside, I'd watch the 50-day EMA, because clearing that currently at the 1.0758 level then would be a major technical indication that we are going to go to the upside. You can make an argument that we are in the midst of a descending triangle, so we'll have to see if we can break down. And if we were to break down below the 1.06 level, then we could be looking at parity based on the measured move. I don't think that's necessarily the way this is going to go, but it is something you need to keep in the back of your mind, as this could be a huge move. Looking at the British pound against the Japanese yen, we've been all over the place, and I think it shows signs of exhaustion. That being said, I think this is still a market that you're looking to buy, as the interest rate differential most certainly opens up the possibility of the British pound rallying over the longer term against the Japanese yen as you get paid to hold on to this pair. If we break down from here, the 200 yen level is an area that is now attracting the 50-day EMA. So I think you've got a situation where you might be able to take advantage of some technical analysis here and put a position on. If we break to the upside, the 205 yen level is an area that I think a lot of people will be watching, as it was a recent swing high, but we have absolutely collapsed from there. This does make a certain amount of sense because, quite frankly, this is a market that got way too ahead of itself, like most other yen-related markets. If we were to break down below the 200 yen level, then we start to look at the 198.50 yen level, which is the bottom of the overall gap. I think given enough time, markets continue to see value hunting come back into the picture, and the better the price, the better the carry trade becomes. The Canadian dollar continues to drop against the Swiss franc as it is now testing the crucial 0.50 level, as it is a level that has been important to the pair for the last couple of weeks. If we were to break down below the 0.5675 level, then the market could really start to fall apart. If we bounce from here, the market is likely to go look into the 50 cap or the 50-day EMA at the 0.5760 level, which is dropping. If we can break above that level, then it's likely that we could be trying to put in some type of bottom. And it is interesting that the pair is doing the same thing a lot of other Swiss franc denominated pairs are doing. At at this point, it looks like the Swiss franc is trying to strengthen, but may be running into a little bit of a problem. The difference here, of course, is that the Canadian dollar itself is so weak that I don't really want to own it against the Swiss franc. So with that being the case, I'm going to be very cautious here. I believe you got a situation where we are trying to build some type of basing pattern, and if we can just get that momentum, then maybe you could get long of this pair. But I, using this as a signal in other pairs, will probably buy something like the British pound against the Swiss franc, or maybe even the US dollar. This one will probably climb slower just because of the weakness of the Canadian dollar itself. Speaking of the Canadian dollar and a signal, we now have the Canadian dollar Japanese yen pair in front of you. And this, of course, is a market that has pulled back over the last couple of days after gapping to the upside. The market looks very likely to continue to find buyers on dips. And that, of course, is a situation where traders were looking for value. And value at this point in time ends up being lower prices. The Canadian dollar rallying against the Japanese yen opens up the possibility of shorting the yen against multiple other currencies. It's not just about the Canadian dollar. The 50-day EMA comes into the picture at 107.12 yen and is rising. So that could end up being a little bit of support as well. If this thing takes off to the upside, again, much like against the Swiss franc, I'm not buying the Canadian dollar. I'm probably buying the pound or the dollar. The euro has broken through resistance against the Norwegian krone as the market has broken above the 11.75 level. And now I think if we can break above the top of the candlestick at 11.81, this is a market that could grind its way toward the 12 kroner level. Short-term pullbacks, I think, are buying opportunities. And it looks to me like the euro is trying to flex its muscle against the Norwegian currency. But again, this is one of those grinding type of pairs, so you have to be cautious about expecting huge moves. Speaking of Scandinavia, the euro against the Swedish krona has tested the 11.08 level, an area that I've been talking about for several days now. If we can break there, then we will test the 200-day EMA. And if we could break above there, then I think it opens a move to the 11.20 level. Short-term pullbacks continue to offer buying opportunities, especially near the 11 Norwegian krone or Swedish krona level. So I think we are getting in a consolidation range, but if we can break, then it's a good sign. The New Zealand dollar has fallen a bit during the trading session on Tuesday, and now it looks like we are trying to fill the gap here against the yen. If we can break above the highs of the Monday session, then it opens up a move to the 88.4 level. Ultimately, this is kind of like the Canadian dollar in the sense that while you could buy it against the yen, the reality is that if the yen starts selling off, we start seeing the Japanese yen denominated currency pairs rise, you're probably going to get more momentum and more real estate covered by purchasing a different currency than the New Zealand dollar. The New Zealand dollar against the Swiss franc has fallen, but it's also bounced a little bit. So this tells me that there's real interest in trying to at least turn things around against the franc. We may not be able to do it in this pair, but again, this is a situation where you're looking at the totality of the market and you are recognizing that the Swiss franc may be a little overdone. Maybe a bounce is coming. Again, though, I'd rather buy the US dollar than the New Zealand dollar. But if we start to see strength here, that shows you just how weak the Swiss franc might end up being. The US dollar initially rallied against the Mexican peso again, but it seems to be running into a lot of trouble above the 18.5 level. The 50-day EMA is sitting right here as well. So by rallying and pulling back, we have ended up forming a shooting star at the end of the day, and that, of course, is a sign of exhaustion. If we fall from here, and that would be with the trend, we could drop to the 18.30 level. If we break above the top of the candlestick, basically at 18.62, then we could go as high as 18.85. Keep in mind that this pair is a little bit different than many others, as the US dollar will weaken when strength comes out of the United States against the Mexican peso. That's because the Mexican economy is highly levered to the US economy, as they send a lot of exports into the USA. So think of it along the lines of a scenario where traders are trying to look at this through the prism of whether or not those Mexican goods end up in the USA. You get paid to be short of this pair. So the interest rate differential most certainly favors you at this point if you are shorting. And we do continue to see a lot of exhaustion. All of that being said, if we were to break above the 19 pesos level, I think at that point in time, you have to have serious thoughts about a trend change in this market. The crude oil market, the US oil market, has shown itself to be a little bit noisy during the session, but we're at least trying to bounce a bit. I still think you have a lot of overhang here as far as resistance is concerned. So if we can rally from here, I'd be watching the $60 level very closely, as it is a large round psychologically significant figure and the bottom of a consolidation range. Breaking above there could open up a move to $62, but we'll just have to wait and see how that plays out. I do think that we have a situation where rallies are going to be faded. So what I'm looking for is signs of exhaustion that I can start selling into. If we were to break above the 50-day EMA, then I might step back and take a little bit of a breather. But oil still looks really weak. And at this point, I think you still have to look at the overproduction of Russia, OPEC, and the United States as a major detriment to this market. We are getting close to a major support level in the form of $55 because that is something that we'll be watching. If we break down below 55, we're going to plummet. I don't think that's the case, though. The Nasdaq 100 initially plunged during the trading session in the first couple of hours, but by the time we got to about 10:30, 10:45 in New York, we started to turn things around. It's interesting that we now are forming a hammer, and it looks like we are trying to get back to the 25,000 level. This bounce shows that there is still resiliency out there, and perhaps traders are starting to think about the long term as we are still looking at loose monetary policy potentially coming into the picture. And of course, stocks only go higher over the longer term. At least that's the attitude. With this, if we can break 25,000, we can really get moving. The S&P 500 has shown itself to be bullish. And at this point in time, we are recapturing the trend line. You can see that we tested it during the trading session just above the 50-day EMA on Tuesday and then turned around. I think if we can get above the 6,700 level, it's likely that the S&P 500 really takes off. I'm not necessarily thinking that we're going to explode to the upside, but that selling pressure on Friday, I think, gets forgotten much quicker than a lot of people anticipate, as the buy on the dip crowd and attitude will continue to be a major driver. Furthermore, it looks, at least at first blush, as the speech by Jerome Powell really hasn't shaken the market's confidence. Powell said that data before the U.S. government shutdown did suggest that growth might be better than expected. So it'll be interesting to see what interest rates do. But as things stand right now, people are looking at that as a good sign. The big winner for the day, as far as I can see, is the Dow Jones 30. Look at the way we've turned around, and now we've almost wiped out the Friday candlestick. This is a very bullish sign with the 50-day EMA offering support, and I think you've got to look at this as a market that's trying to get back to the recent all-time highs. With this, I like the Dow Jones 30, and I do think that it is a market that you cannot short, at least not until you break cleanly below the 45,000 level, something that's been completely repudiated. And finally, here in the Bitcoin market, this one is going to be a little bit more difficult to deal with, mainly because there are so many different factors out there that could come into play. I look at the $108,000 level as being important. I have for months now, and it did show its importance during the trading session over the weekend. And now we rallied a bit. We tested the 50-day EMA. We've plunged in trying to recover late in the day. The way this candlestick shape is starting to present itself does suggest that perhaps there are buyers down here. And if so, then we may stay range bound between $108,000 and $125,000 for the time being. That actually would be a very good thing. With all of the volatility and the risk off type of attitude out there, if Bitcoin can stay somewhat stable, that's an excellent sign of strength. My name's Chris Lewis. I work for Hola Prime, and if you found this informative, please give me a thumbs up and subscribe to the channel for more analysis.
Hola Prime, trade with transparency.